All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Interesting market going on right here. There are no new signals here for the challenge. In fact, let's start with the challenge real quick. There's just nothing. Let me just pull up scans here. The 3-7 scans, right? But you can see UPS and Vulcan Materials both have downside 3-7 crossovers, but neither are even close to a signal. Here's Vulcan Materials, which has a crossover every day, different direction every day, in absolute consolidation. And then here's UPS. This is not a sign of a new trend forming. It's a small pullback in the context of things. So those are the only two downside crossovers up there. And I know, okay, yep, market's up big here this morning, so there's got to be some upside crossovers, right? Well, here's the upside crossover list. It's blank. It's absolutely blank. Now, if we expand that list to scan for all stocks in the S&P 500, the list gets a few stocks, right? Starbucks, Northrop Grumman are on this list. That have some 3-7 crossovers. Starbucks is one that you'll probably see coming into the challenge watch list next challenge, but it is one that it continues to perform very well when it comes to signals, but it's one that it isn't a signal here today. Even though it's off the watch list, it wouldn't be a signal here with how it sits this morning. So no new signals to deal with here for the challenge, and it leaves us in cash, which, in some regards, okay, it's a safe place to be, but it's also, I'd love to be in something, ride something a little bit, but anyways, market. Big rally. Here I have S&P futures, and this is from last night. And the S&P closed yesterday, and then a couple hours later, we saw S&P futures down here at 27.75. And in that time period, this is less than 24 hours, we have seen the market move up almost 100 points on the S&P. Just a little shy of that 100 mark, but almost a 100-point rally on the S&P in less than 24 hours. Got to be bullish, right? That has to be super bullish. That has to be, something's changed, something really dramatic and changed, right? Well, let me back this out. And here we go since last week. This is what the market looks like, right? The 100-point or almost 100-point rally barely puts a dent into into erasing some of the sell pressure that has come in over the last few trading days. And that's what the market's faced with, right? That's what the market's faced with, and we are seeing things, jump a little bit. But if you'll notice here this morning, even though futures aren't pulling back a ton, we see some individual stocks, pulling on back. And some interesting allocations that are going on out there in the market here this morning. When we get a market that changes, they puts itself into this volatile state, and I made a comment on my note here this morning. I said, so what is the value of stocks in a world where the Fed thinks that the U.S. economy is not at risk? And I know that might be an oversimplification of what the Fed has said, but it's what the market is reading from the Fed. Where corporate earnings are in a recession, where a hard Brexit is coming, and where U.S.-China trade sentiment is the worst it may have ever been. These are the questions that market participants are dealing with. The questions mean that more volatility is ahead and the wall of worry that needs to be fully priced in before major traction can be found for the bulls. This is one of those scenarios where the wall of worry is growing, right? It's not maxed, it's not maxed, but it is growing. It is increased. The stuff to worry about is increasing, out there. Volatility in those situations increases dramatically. It's a time period where a lot of traders and a lot of investors feel a lot of angst. If they're in cash looking to get in, they're worried about missing the next move. If they're in, they're worried about where that next move is going. Right? There's a lot of angst when the market gets, highly volatile, from, when it comes to traders, right? And there's a couple ways around it. For me, I like little all or nothing gambles, when the option pricing is right. It hasn't been here just yet, but if the market stays up here the rest of the day, we'll see some implied volatilities come down enough to where, there'll be some interesting ones, but that's how I like to play it. But it is one where in the back of people's minds, it's always, oh no, is this the end of the sell-off? Do I need to get in or am I missing out? Okay. I want to show you something here. And I have here on Wikipedia just a list of the largest percentage changes in the market history, right? Largest percentage changes, one-day changes in the market historically. The biggest one, 1933, 15%. Next one, 1931, almost 15%. Next one, 1929, 1030. Market up 12%. 1029, 1030, 29. Well, 1029, 1929 was the day of the stock market crash. One day prior. Big crash. One of the biggest crashes in history. And then the next day, the market bounced 12%. The third biggest rally in history came after a market crash, and the other two biggest rallies came during that big bad bear market that followed the crash. 1932. So all of these are Great Depression rallies. The next two biggest rallies in the market, 2008, 1013 and 1028. Now, we can actually go chart these a little easier. So let's go do it. Let's just come into the S&P and let's take a look at what October of 2008 looked like. I mean, 10 years ago, right? Not that long ago. Let's go from May 1st to December 31st, and we'll get rid of our indicators here. But the fourth and fifth biggest rally in market history came in October, right? And the dates here on it, right? I mean, we could probably see which days they are. One is right here. Right? One is right here. The other is right here. These are two of the biggest market rallies in the history of the market. All clear sign for the bulls? Sell-off is over. Can't go any lower, right? Must be a buy sign, right? No, not at all. When we see S&P futures move almost 100 points overnight, that is anything but a bullish signal. That is a continued sign that, look, things are not very pretty. Could things change? Yeah, they could. When you look at the news last night, did things change? No, not really, right? They didn't get worse. Yes, the U.S. called China a currency manipulator. Fine. What's the material impact of that? Not a whole lot. Right, it's a headline grabber more than anything. The U.S. has treated China like a currency manipulator for a long time. China announced that they weren't going to buy, more agricultural products from the U.S. Okay, great. We're not talking about massive changes. In fact, if you look at some of the changes, most of them are probably more to the downside. But we get when the market gets volatile, when the market conditions go bearish like this, there's a vacuum, right? And we talked about this last week, where the market makers are not willing to support the prices in the same way that they were before, right? And so you just start to get these massive moves, both to the downside and to the upside. And when a market goes into bearish conditions, that's when some of the biggest rallies can ultimately happen. Are they playable? Yeah, you can play them. Day trade them, all of that, right? They're definitely tradable in that regard. From an option swing trading challenge standpoint, where an alert has to go out for an exit and an entry, or an entry and an exit, no, not very realistic, right? But keep in mind, that just because there's a huge rally, it doesn't mean the market's out of the woods. And in fact, if we come into this list, every single one of these big rally days, except I'm not sure about 1939, 09, 05, not sure about that day, but every one of these days, we're talking about bear market conditions, here in the market. The most recent here, the 2009, March 23rd, right? Big market rally here. And let's just come take a look at it because that happened this year, and so right in here, but that's a point move. So we're not talking about anything too major there. The big moves percentage wise, we had bigger percent moves down here the end of last year. But bottom line, if we're going to consider a rally and even start to look at a rally and say, you know what, the Bulls may be taking back control, we sure as heck better at least breach the high from the prior day, right? That's number one. If we're going to talk about, hey, things turning bullish, we better at least breach the high of the prior day. We look back here in October, boom, we had that. We breached the high of the prior day. Did that mean things turned bullish? No, it didn't, but it's a good starting place to start to look and to say, hey, you know what, maybe there is something, right? But if we're not even going to breach the highs from the prior day, chances are, what are we going to see? We're going to see a bleed up for a day or two, and then we're going to see another leg back on down. And we've come into some of those oversold conditions where the CCI is at that minus 300 level. In fact, if you looked around a lot of stocks yesterday afternoon, CCI is all below that minus 300 level where we tend to get a bounce. And that's what we're seeing right here. But no real change in the metrics, no real change in even the cycle. And I do think that this rally that we are seeing, and it can continue, and I kind of expect it to continue a little bit, but I think that's only further confirmation of some further selling to come as we go on forward. Okay, so anyway, that's going on in the market, right here with it. I made the comment this morning also about the wall of worry, and I had done about an hour-long training on the wall of worry a few years back. I'll dig that out and post that into the message feed here today if you're interested. But I used the phrase yesterday, you buy when there's blood running in the streets and sell when there's people pounding at your door, right? There's all sorts of variations of that saying. And it's a great saying, in hindsight. But in real time, defining people pounding at your door, defining enough blood running in the streets, is always very difficult. But it's one of those where the wall of worry kind of plays into that. And you have to kind of look and say, okay, is the wall of worry escalating or de-escalating? And you can't look at, if you're a trader well, no matter who you are, unless you're a big fund manager, you've got to kind of put yourself in fund manager shoes, right? And say, okay, if you're waking up, you're going to the office this morning, big fund manager, what's on your mind? What's happening? What's the worries, right? And, you look and you say, well, fund managers have a few worries. Overexposure is one of the big ones right now with what this year has done. But missing out on the next rally is also another big one. And so, when fund managers wake up, they see the market gapping up, they don't want to miss on that next rally. There's still no other real game in town. they're forced to kind of put a little bit at least into play, and some of the oscillations in the market are only going to intensify that, and I think only going to increase the propensity of this market to sell off and to have further selling than what we have seen thus far. I'm very interested to see whether or not we create a higher low or not. Right? I kind of suspect that given everything that's going on, we will come back to these lows from this year. That's my suspicion of ultimately where it comes down to, and I would expect a very hard bounce off of that level, and I would expect it to maybe even return up to 3,000, but probably fall a little bit short unless we see massive change in the market narrative. And then from there, it'll be very interesting. It'll be definitely very interesting. But that's kind of my expectation. We'll see kind of how that plays out. I don't have a crystal ball or anything, but just when we see how things are kind of oscillating here in the market, and where both sides are kind of standing and where kind of fund managers are. Keep in mind, most fund managers, they're not sitting with massive red in the ledger here for the year, right? They're sitting with green, so they don't have to be super panicky, right? They don't have to be super super dramatic in their movement and what they decide to do. But what is the case is that if we do get the dip and we start to rip, right? Fund managers are going to be forced to get in fast because they can't miss out on further sustained upside. Can they miss out on bounces? Sure. But further sustained upside, they cannot miss out on. They cannot lag the indexes. They can ride things lower and be just fine, but they can't miss out on the upside. And I do think that's going to ultimately lead to a market that does do some chasing into new highs. But I don't expect that to come from this level. I do expect it to come from a lower level, just given the cycle of what we have seen and what is going on here with the wall of worry. Okay. Now, last thing I wanted to comment on here, the fact that we just haven't seen a lot of 3-7 crossovers, here on the board, and which leaves the challenge in cash. And one of the things when we put the challenge algorithm together and back tested it and then real time tested it and everything else, we knew that when the market went dramatic, that there were times where, look, there's just not crossovers to kind of be able to play it. Things just start to go, and we didn't get a bear signal on American Airlines right back here. And you know what? It hasn't had a 3-7 crossover to give another. Excuse me. My apologies. So it hasn't even had a crossover to give us a chance to get in. Something like Apple coming from highs. Yeah, it gave the crossover, but not an entry point. For how the algorithm is set up, and we have a lot of that going on right here. And that is the case, and that's one of the reasons, and I talked about it yesterday, that we put together to have some cash allocated for the market vibe, because the market vibe picks up on these kind of bigger moves that starts to happen, so gives us a play. But I did not include that in this challenge just from a simplicity standpoint. It will be included in the future, but as you look at a lot of these stocks, right? If I'm going to get a chance to play Bank of America lower, what do I need to happen? I need to see Bank of America have a 3-7 crossover to the upside, and then have a downside 3-7 crossover. So, is Bank of America close to triggering bearish? No, not even close. And it doesn't mean Bank of America can't go lower. Right? I mean, Bank of America goes sharply lower, even though it doesn't have a signal. Right? The algorithm was not put together to try to grab each and every single move. It was put together to grab the higher probability moves. But the way that the market moved here post-Fed and with the Trump announcement, a lot of these stocks just failed to give any sort of bearish signal before the drop, or should I say a bearish signal that's tradable, right? Yep, Chipotle, we had a downside 3-7 cross yesterday, but it's not a tradable bearish signal or a high probability bearish signal, and that's what we've seen. And that's I went through the entire watch list yesterday, and it's kind of that same story. So it's one where need to see a little bit of rally to, give some upside 3-7 crossovers. I suspect with the depth of some of these sells that we wouldn't get a lot of bullish signals on those 3-7 crossovers. Disney possibly, but it is one where Facebook possibly, but overall for something like a FCX to trigger bearish, we'd need to see it rally and then start to reverse on lower. So that's the case for most stocks in the watch list, and it's just one of those where we'll kind of be sitting and waiting, right? We'll be sitting and waiting. We never got a bullish signal here on gold, so it continues to climb, but nothing worth trading. We had a bullish signal on Barrick yesterday, but triggered on a 2 ATR move, so can't really trade it. So that's kind of where it's sitting, right? And one of the handcuffs of the challenge in the format like it is right now is that, sometimes it is an absolute handcuff. You see something going on, can react this way and that way and go take advantage of the opportunity, but you don't have the signal, so you can't really run with it. And that's kind of where things are right now. And that will ultimately change. And I do think that this sell-off ultimately sets up for higher quality signals than what we saw in July with a lot of the consolidation and less of the shakeout. You think about the shakedown that we saw in May and then what the challenge was able to do in June. It wasn't a ton of signals, but the signals we saw a lot higher quality and a lot better follow through to the signals. And so that's kind of where things sit, what I'm looking for there. And again, I don't know if the next signals are going to be bullish or bearish or whatnot, but I will react to them as soon as they happen, and go out and trade them. Okay. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on here with you this afternoon, and we'll talk to you then. Take care.